This boring scalping strategy made me a profitable trader, and it works so well that it almost feels like you're cheating. If somebody would have told me this when I first started trading, I would have saved years of pain, blown accounts, and wasted time. This strategy is boring because it's very repetitive. You're trading the same 3 setups every single day. No hopping from strategy to strategy, no overcomplicating. You're literally just doing the same thing over and over again. And that's exactly why it works. Because boring plus repetitive equals profitable when it comes to trading. So in this video, I'm going to break down the entire strategy step by step. I'm going to show you real trade examples, and I'm going to show you how to avoid the most common mistakes that keep most traders unprofitable. Let's get into it. Before we dive into the strategy, I need to explain why boring is actually a good thing in trading. Most traders fail because they're constantly chasing the next shiny object. They see a new strategy on YouTube, they try it for a week, it doesn't work immediately, so then they immediately move on to the next one. They're strategy hopping, and strategy hopping is the fastest way to stay broke. The reality is, trading is not about finding the perfect strategy. It's about finding a profitable strategy and executing it consistently. That's where the boring piece comes in. When you have a boring, or in other words, repetitive strategy, you're doing the same exact thing every single day. You're not second guessing yourself. You're not jumping around. You're just executing. And over time, that consistency compounds into profitability. Now, this strategy is built on one concept: liquidity. My godfather, who was a trader at Goldman Sachs for over 30 years before he retired, explained it to me like this. Banks don't look at charts the way retail traders do. They look at where the most orders are clustered so they can take out the liquidity. And where are the most orders? Above recent highs, where breakout traders have their buy stops, and below recent lows, where long traders have their stop losses. These levels act as massive pools of liquidity. The banks know this, and they engineer moves to these levels to trigger these orders and to fill their own positions. Our job is not to fight the banks, it's to trade with the banks. And that's exactly what this strategy does. We're identifying key liquidity levels, and we are trading the reactions around these levels. It's simple, it's boring, and it works day in and day out. All right, so let's get into the strategy. The first thing that you need to be doing every single morning is waking up and marking out your key levels so you know where you are going to take a trade. And there are only 3 key levels that I care about. The first key level, and this is very simple and it's very important, it's going to be the 8 a.m. candle. This is literally just you going on the 15-minute time frame, finding where it says 8 a.m. on TradingView, starting from the bottom of the candle, going to the top and marking out this entire candle using this little rectangle tool right here in the settings. And another little trick that I'll give you guys is you have to double tap this rectangle tool and check the midline, because the midline is going to act as an area of strength or weakness, and it's a really good visual cue for us to see what we're doing. The next levels we are going to mark out are going to be, keyword is untested, session highs and lows. Tested is just another word for touch. So when I say untested, just think untouched. All right, everyone. So we are going to go ahead and mark out untested levels, meaning levels that have not yet been hit. So we're going to mark out this low, going to mark out this low, and then we're going to mark out this low as well as this one. And the only other level we have that has not yet been tested is going to be this high that we have up here. So we'll go ahead and mark that one out as well. And I like to mark out my highs using black, just like I have my selling candlesticks in black. I like to be kind of color coordinated with that. Now we're going to wait and we're going to see what price does when it hits these levels. So we can already see that price broke through both of these levels, showing that they're weak and we don't need to have them marked out because they're unimportant. And we just broke through this level. The one level we have not yet broken through, and when I say broken through, I just mean a full 15-minute candle closure below, is this low right here. Why are these levels so important? Because this is where retail traders have their stop losses and their breakout orders. The banks know this, and they are pushing price to these levels to grab the liquidity. Big banks can't just hit buy and sell like you and me. They have to wait until price gets to a certain level, and then they have to deploy their capital strategically. This candle is important because this is where the first big move of the day happens. This little rectangle right here sets the stage for the entire trading day. The banks use this range to set the tone for the day, and we're going to trade the reactions around this level. There are only 3 setups that you need to know about: bounces, rejections, and break and retests. Let me break them all down for you right now on the charts. The first setup is a break and retest setup, and this setup revolves around the first 15-minute candle at 8 a.m. Eastern Standard Time. With this setup, we are looking for a very specific motion. We are looking to see price break out either to the upside or to the downside. Today, it obviously broke out to the downside. And then we are waiting to see a retest, meaning a retouch of the midpoint. And the last part is we're expecting price to continue in the same direction that it broke out to initially. So today, price broke to the downside. We're looking for a retest. And then if we get that retest, we'll enter some shorts, expecting price to move down another 15 or 20 points. That's why I told you guys to mark out this midpoint, because the midpoint often gives us really accurate entries and it allows us to place our stop loss and our take profit at the best possible zones. I'll show you exactly how I do this right now. With this setup, I like to have my entry at the midpoint. I like to have around a 5 to 10 point stop loss. Today, we're going to have a 5-point stop loss, and I like to target 15 to 20 points, just like that. And we're going to go ahead and get this trade set up. Let's see if this trade plays out, everybody. Let's see exactly how price is going to react to our levels. Boom, right? So we hit that midpoint and we're already having a beautiful rejection right at that midpoint. All right, everybody. So right here, we're out of this trade. You can see that we caught a nice 1 to 3 risk to reward ratio off of that break and retest setup to the downside. I'll go ahead and show you all a few more examples of the setup so you can see exactly how it works. All right, everyone. Now we're going to go ahead and look at an example of a break and retest potentially to the upside. So I'm going to mark out our lows as we always do. And then we're just going to go ahead and mark out this untested high right here. And then the only other level that we need to mark out that is untested is going to be this level. And then technically these two levels, although they are a bit far away, but I just want to get you guys in the habit of marking out your levels correctly. All right, so now let's see which direction price is breaking out to. It's 9:30. All right, 9:15. Still looks like price is breaking out to the upside. All right, everybody. This is a perfect example of how to know where price is breaking out to. All you're doing is you're waiting until 9:30 and you're saying to yourself, is price above the midpoint or is price below the midpoint, right? And you obviously want it to be 5 to 10 points above or 5 to 10 points below, because that's what is considered a break, right? Like price has to actually break up. So today, very clear to see that we are breaking to the upside, meaning we now have a clear idea of what we're looking for. We're looking for a retest of this midpoint right there with a sharp reaction. And then we're looking for 15 to 20 points with the risk to reward of 1 to 3, giving us a 5 to 6, potentially, 8 or 9 point stop loss. So let's go ahead and place this trade right here and then target 15 points. We're actually going to target this untested high, right? That's a really nice area to target. We're going to have a stop loss of 5 points on this one. We're going to be, nice and tight. Let's see how this thing plays out, everybody. Boom. All right, we are filled. We are in that trade. We are now up, looking like we're going to hit our take profit. Little choppy. Boom. There we are. Take profit, order filled, whatever you want to call it. Got out of that trade and we were able to catch around 16 points with a beautiful risk to reward of 1 to 3. The main thing I'm trying to get you guys to learn in this video is how simple this strategy is and how to execute it daily. That's why I'm spending time going into detail on exactly what to look for and what not to look for. A few rules when you are trading the 8 a.m. opening range breakout. First, you should never be trading if this candle is bigger than 20 points, right? Because if this candle is, let's say this big, what that means is that our stop loss is going to be inside of the range, meaning it's not even going to make sense, and our take profit's going to have to be 40 or 50 points. So the math just does not work. So that's the first thing, is you want to make sure it's under 20 points. The second thing is you want to make sure that there's good volume. You can do this by double clicking a candlestick and then going to status line and checking that little box where it says volume. And I like to look for the volume on the 1 minute, because for me, it doesn't really make sense to look, on the 15 minute, because let's say that 10 minutes ago we had great volume, but 3 minutes ago the volume's dying down. I would rather look at a minute by minute read of what exactly is going on with the volume. The last tip I'll give you guys about trading this setup is that you want to make sure you're trading specifically between the hours of 9 a.m. Eastern Standard Time and 11:30 a.m. Eastern Standard Time. I have noticed that is when this setup tends to play out the best. That's when US stocks are most active. We're trading an index of, the US stocks. We're trading the S&P 500. So it makes sense that is the important time to trade. All right, guys, now we're going to talk about the next setup, which is going to be a very simple setup. This setup is called a rejection off of a high. All right, everybody. So as always, we're going to go ahead and mark out our first 15-minute candle like so. And today we actually had a break and retest that played out perfectly to the downside. But for the sake of this example, we are going to focus on the second trade that I took today, which is going to be a rejection trade. I just wanted to show you guys how consistent that setup is. Rejection trades are very simple. All we are doing is we are going down to the 1 minute and the 5 minute time frame, and we are looking for a sign of either strength or weakness at this level. For example, if price hits this level and is unable to close above, that's going to be a sign that this level is weak and that sellers are in control. I'll show you guys exactly how this plays out. All right, everybody, so we just tapped this high and we are failing to close above it on the smaller time frames. I'm going to wait for a few more candle closures, then I'll go ahead and take my trade. All right, everybody, we are failing to break above this level, so I'm going to go ahead and enter some shorts right here. With a trade like this, I'll have a stop loss at about 5 to 10 points. So we're going to do 8 points here, and we're going to go ahead and target 24 points, giving us a 1 to 3 risk to reward ratio right at the middle of this zone. So let's see how this plays out. Boom. Right, we just hit take profit. That was a wonderful trade. All right, everybody, let's look at another example of a projection setup. So as always, we're gonna go ahead and mark out our first 15-minute candle from 8 to 15 a.m. Eastern Standard Time. And it looks like we actually had a break and retest this day as well. The only reason I'm mentioning that is just because I want to show you guys how damn consistent this setup is, right? So I'm often able to take this setup, make my money, and then find another setup throughout the day, which is what I did on a day like today. So after I took my break and retest trade, I decided to look for a potential rejection off of this Asia high right there. So if price taps this level and fails to close above it, we are going to take some shorts. All right, guys, we're getting very close to this level. Let's see exactly what goes on. All right, we're gonna go down to the shorter time frames. All right, everybody, now we're on the 5-minute. Let's see if price wants to close above this level. All right, everyone, so the key thing I want you guys to observe is how we're not having any candle closures above this level. For a candle to fully close above a level, we need not just the wick and the body, but the entire candle to be above the level, right? So this little thing doesn't count as a candle closure. A candle closure would have to be, a candle that's literally not touching this level whatsoever. And we haven't had that, meaning that sellers are putting up a very good price. So meaning that sellers are putting up a very strong fight. So what we're going to do is we are going to go ahead and enter some shorts. If price can continue to close under here, we're going to target 15 points with a 1 to 3 risk to reward ratio. So let's see exactly how this setup plays out. All right, guys, we are filled, and boom, that was a very quick trade. Beautiful, beautiful example of this setup playing out. The key thing that you are observing with this setup is weakness on the lower time frames. So many people miss that, so I have to repeat it so many times because I want you guys to make sure that you're finding the best possible entries at all times. All right, everyone. So I showed you guys rejections. I showed you guys break and retests. Now we're going to talk about the last setup, and the good news is if you understand rejections, this setup is literally just the opposite of a rejection. This setup is called a bounce off of an untested low, and it's exactly what it sounds like. You can almost imagine that price is like a bouncy ball. And if you throw a bouncy ball at the ground, it's going to bounce, right? So if you take price and price interacts with an untested low, it is likely going to bounce because there's lots of buyers that want to participate in price around that level. Whereas with the rejection, it's almost like you're taking a bouncy ball and throwing it at the roof and it's rejecting off of a high, or it's bouncing down from the roof because of gravity. That's a great analogy that I like to use when I'm thinking about these two setups. So we're going to go ahead and mark out our untested lows like so. And now we're going to hit play and see which direction price wants to go to. All right, guys, so it was very, very clear that price wanted to bounce off that level. I am going to go ahead and play that back, and I'm actually going to go on a little bit lower of a time frame so we can find our entry. All right, everybody, so we are now on the lower time frames, and it's very clear that we've disrespected both of these levels, so we can delete those, and we are now focused on taking a trade around this level. Ideally, we take our entry at the top of this high right here, so we enter at this high, and we have our stop loss at this low, because this low is a clear point of invalidation, meaning if price comes below this low, we are wrong, right? And it's important to have your stop losses at clear points of invalidation so you can maximize your risk to reward. So let's see what's going on right here. Looking like price definitely wants to come down to this level. All right, we just tapped this level. So if we get a few candle closures above this level, I'm going to enter some longs. All right, guys, so we just tapped this level. So ideally, we get another touch of this level. So what I'm going to do is I'm going to go ahead and have my order ready right here. If we get another touch of this level, I'm going to target 25 points just because this is a very, very strong low. And I think that it's worth it with my risk to reward so tight. So let's see if we can get a trade out of this, guys. Let's hit play and see what happens. Boom. We are now in that trade. Our order is filled. We are in longs. Let's go ahead and speed this up a tad bit. Looking pretty good, looking decent, a little choppy. Coming a little close to our entry. Still looking pretty good though. Boom. We are out of that trade for a risk to reward of almost 1 to 4, everyone. That was a very impressive trade. So that was the trade that I just took. Now, I want to take a moment and show you guys how powerful these levels are, right? So this is our untested low. This is another untested low. And you can see that we bounced off these lows, right? This is a little area of demand. Not once, not twice, not 3 times, but 1, 2, 3, 4, 5 times before rejecting, meaning you had 5 opportunities, 1, 2, 3, 4, 5 opportunities to take a trade around this low. These untested highs and these untested lows act as magnets, right? It's almost like when you have 2 magnets with the north end and the south end facing each other and they go whoosh. That's the same thing, but price is hitting the levels. These are key areas of liquidity, and the reasons we trade around these areas and these areas only is because price gives us really big reactions, like the 5 or 6 reactions that I literally just showed you. All right, so you now know all of the setups that I use every single day when I'm day trading. But before you start trading this, I need to show you the common mistakes that keep most traders unprofitable. The first mistake is trading inside of the 8 to 8:15 a.m. range. This is the biggest mistake I see traders make. They don't even wait for a breakout. They just immediately start buying and selling when they see price in the range, which it's going to be in every morning. If you're trading a bounce or a rejection, you need to see strength if you're looking for buyers, or weakness if you're looking for sellers off of a high. Don't force trades and let the market come to you. The second mistake I see people make, and this is a huge one, this is trading tested levels. If a level has already been hit, touched, or tested, it is not as powerful. You want to trade untested levels because that's where all the orders are sitting. After price interacts with a level, all of the people that had orders at that level are already transacting, so the level isn't strong anymore. Third mistake is ignoring the trend. This is a big one, especially with the break and retest. If price is in a strong downtrend and you're trying to take longs off of a low, you are fighting the trend, and that's a recipe for disaster. Make sure that you are trading with the trend, not against it. The fourth mistake is just simply not waiting for the right time. The best setups happen between 9:30 a.m. Eastern Standard Time and 12 noon Eastern Standard Time. This is when the market has the most volume and the most momentum. And if you're trying to trade outside of this window, you're just going to get chopped up. If you stick to higher probability times, you will have much better results. Let me explain to you why this strategy works so well and so consistently. The first reason is it's based off institutional principles. This isn't some random pattern that I found on a YouTube tutorial. This is how the biggest players in the market actually move price. We are following the money. The second reason that it works is because it's simple. There are only 3 setups. You're not juggling 10 different strategies. You're just executing the same thing every single day, regardless of what the market's doing. The third reason is that it's rule-based. There's no subjectivity. You're not guessing. You're following a clear set of rules. The fourth reason is that it has a massive edge. With a 1-to-3 or 1-to-4 risk to reward ratio, you only need to win 33% of your trades, or 1 in every 3 trades, to be a profitable trader. And this strategy wins way more than that. Now, here's the reality. This strategy is profitable, but you have to be in front of the computer to trade it. And that is the only problem with this strategy. You can only trade when you're watching the charts. You're limited by your schedule, you're limited by your emotions, and you are limited by how many setups you can catch in a day. Manual trading works, but if you want to maximize your edge, you need to think about automation. Here's why. 1. An algorithm trades 24/7, so it catches every setup, whether you're at your desk or not, and sometimes the best setups will happen at 3 a.m., so if you're sleeping, you're just missing them. Second, an algorithm executes perfectly every single time. No hesitation, no cutting winners early, no revenge trading, just clean execution. Lastly, an algorithm scales your edge. Instead of catching 2 to 3 setups a day, it's catching 10, 15, sometimes even 20 during multiple sessions. That's the difference between being barely profitable and being very profitable. Now, I'm not saying you have to automate, but the institutions are not trading manually. They're using algorithms. And if you want to compete, you need to start thinking like them. Let me show you what this looks like. I've built 3 algorithms to trade this exact strategy. The first algorithm is the prop firm scalper. And this algorithm is awesome because what it does is it has a very high win rate and it scalps. So it trades very similar to the way that I trade. Obviously, you guys can see the results over the last 5 years and over the last 2,700 trades. Now, today we took 2 beautiful setups. We took this long right around this London low, and we were able to catch 73 points on NQ on that trade, which is beautiful for a scalp. And then we took this short in the morning, got 39 points there. We took another short and we got some points there. And yeah, everybody, you guys can see what this algorithm does. It is a scalping algorithm. And yeah, took some more longs off of this London low. And then we took profit up there. So off of that specific trade, I want to say we caught 100 points off of that trade. This next algorithm is awesome. It trades on the 1-minute time frame and it trades ES futures just like I do. And it's really cool because it trades in a very similar manner to the way that I trade. You can see right here, we took some shorts at this untested high and we got out of these shorts for about 10 points, right? So nice little scalp. That's exactly how I trade. Took some more shorts up here, and off of that trade, we were able to catch 12 points, which is nice. Had a small loss right there. Then we took some more beautiful shorts on Monday. We actually had a really nice trade on Monday. We caught around 20 points. Also caught some longs off of this London low on Friday, which gave us a nice profit of, I want to say 20 points as well. Yep, nice 20-point trade. And the daily results are cool, but obviously the fact that I can show you guys a full back test over the last 5 years is what really matters. This next algorithm is super cool. It trades in a little bit of a different manner than the other two algorithms, just in the sense that this algorithm trades on the 1 hour time frame, so it's more of a swing bot. So this one trades NQ and it likes to ride the trend, right? So this bot is focused on identifying the trend and then capitalizing on the big junky moves. All right, so this right here is our swing trading bot, and I'm showing you guys a few setups. You can see that we took some longs at the bottom at this London low, took profit right there. We actually also had some shorts on our way down from this untested Asia high, took profit at this low. Then we were in longs all the way up here. In some more longs, we rode this trend beautifully, and then we flipped short right when price reversed. We were able to catch a beautiful, almost 300-point winner on some shorts, which was really cool to see. And, you know, obviously day in, day out results are cool, but the back test is really what matters. This is a back test over the last 5.5 years. Now you guys can see that this graph is up, green, and to the right, which is what you want to see when you're looking at trading results. All right, so let me recap what we talked about in this video. I showed you a boring, repetitive scalping strategy that turned me into a profitable trader. 2 setups, bounces and rejections, break and retest. That's it. Mark your levels, wait for the reaction, execute the trade. It's simple, it's boring, and it's profitable. Now here's what you need to decide. You have 2 paths. First path is to trade this manually, sit at your desk, watch the charts, and execute every setup yourself. This works and you can definitely be profitable, but you are limited by your time and your execution. The second path is to automate it and to let the algorithms trade 24/7 without any human intervention. They can generate results while you live your life. That's the choice. If you want to take the manual route, go back and watch this video again, take notes, study, and practice on a demo account, get consistent, and then go live. If you want to see how automation works and how you can use our algorithms to trade this strategy for you, there's a link in the description of this video. So book a call with me and my team, and we will show you exactly how it works and how to install it into your funded account or your broker account. Either way, you now have a profitable trading strategy. What you do with it is up to you. If you like this video, drop a like, subscribe, drop a comment, and I'll talk to you all soon. Peace out.